Hello, everyone. Thank you for joining us this Thursday. I want to just share my appreciation and thanks for making the time. I know everyone is busy and there are 1,000 things that you probably could be doing. Really appreciate you spending time with us today. We are going to make this compact, but also very substantive. We know the audience that we're speaking to here, so it's great to have supporters, colleagues, peers, and even business owners attending. My name is Paul Quintero. I'm the proud CEO of Ascendus. We're a locally focused small business lender, but with a national reach. For 30 years, we've built a legacy of access to capital and education. We've served over 56,000 clients, have provided over 420 million in capital. And from a mission perspective, I like saying that we make big dreams come true through small loans. From a risk perspective, I like saying, and this is to borrow from Star Trek, we boldly land where no bank has gone before. So while all that's great, over time, something shifted. And what we realized is that access without mobility wasn't really progress. I like to say you can be in the game, but it doesn't mean you win the game. And so we realized that inclusion, while it's essential, it's not the destination. We understood that we needed movement and very specifically upward mobility. And this insight has sort of served as our North Star and really was the preamble to this Get Ready program that we're going to talk about in a moment. I'm going to digress a little bit and just say I know there's a lot of news and obviously on the political side, a lot of distraction, I'll say, between this dialogue between left and right. But if you're on this webinar today, I think it's because you understand that the real issue, the thing that we really need to address is who's up and who's down. So in that regard, the time that we need to act is now, because we know that economic mobility is really outside the reach of many Americans. 70% of households are still navigating a lot of financial stability, and the big economic engine that is small business owners are under stress. That's why our tagline, "This Way Up," is not just a phrase, I would say it's a vision. Now, in describing today's webinar, we said it's a new path to financial mobility. So I just want to touch very briefly on why we think it is new. The first point I want to make is that for most of our sector, our time and energy has been focused on selecting credit-worthy borrowers. So it's looking at the top of the iceberg or the top of the pyramid. And that's not a problem, it's important. But what do you do with the base of the pyramid that represent the plurality of small business owners in our country and the plurality of people? So what I think is very distinctive about this program is we're not selecting credit-worthy borrowers, we're creating them. That's a fundamental shift in terms of approach. The second thing I would say that's different and new is that this program focuses primarily on native-born small business owners, because for years we've dealt with the challenge of foreign-born entrepreneurs where the primary challenge is they don't exist. There's no credit history, you're starting from scratch. Whereas the native-born entrepreneurs, have a long history of credit challenges or issues on their credit report. And we understood that it's harder to fix legacy problems than to start from scratch. We decided to dig deeper, and that's what this program is going to talk about. So let me pivot to the Get Ready real quick. Today's session is going to be about our research brief, and this is really the first of a two-part series. This part examines credit building for small business owners and primarily looking at the access and the implementation. But we're going to have a part two that's going to look at the change in the actual credit profile. As we have this conversation, there's three questions that sort of guided our work. Number one, can small business owners access capital through this model? Number two, is this program scalable and replicable for our field? And number three, can this program be an effective pathway to credit improvement? So with that preamble, I'm going to hand it over, and I want to share my deepest thanks to MetLife for having sponsored, funded this report. So Brett, thank you, and to the Urban Institute for the work that you've been doing to really analyze this. So Brett, why don't we begin with the findings?
Love it. Thanks so much, Paul. Thanks. Gustavo as well. Thanks to the whole Ascendus team. You were made everything so easy from a research perspective. So I'm Brett Theodos. I'm at the Urban Institute. I lead a practice there focused on mission finance and small business and community development. A lot of work spent looking at CDFIs and the outcomes that they're achieving. And before I dig into the findings, I want to say it's both the substance that matters here. It's actually also the process and the orientation. And we really want our CDFIs and other mission lenders and the partners to really engage in reflective learning. What's working from a genuine perspective? How do we know? How do we improve? That real continuous improvement loop, not a compliance orientation to reporting, which is tempting for all of us who have funders that we need to report things to, but really moving at with a learning thing. I'm getting some noise. I wonder
It has
if
to,
go.
it's on,
Get
but it
everybody
doesn't come up.
muted, Gus. Great. Okay, thanks. So I'm going to walk us through, and we are going to get a read. I'm joined my colleague Amanda Hermans did a lot of good work making this to fruition as well. Okay. Everybody see the slides? Thumbs up? Okay.
Yes.
Great. All right. So first, you heard a little bit. What were we trying to look at here? We're trying to look at expanding access to capital, financial health, particularly for those who haven't been well served. We're looking at the extent to which this program is building a cohort of creditworthy borrowers, and then creating a model and what that means for replication in the field. So this was a mixed methods study, meaning that we had qualitative, a bunch of interviews with a number of stakeholders, staff, business owners themselves, and then quantitative methods, analyzing some program data and some emerging credit data insights as well. Okay, quickly on the findings. So first off, just want to think in where we're starting from on the credit score perspective, right? Folks are walking in with a 571 if they're visible, right? And so this is a group that has not successfully been able to manage credit in the past. That doesn't mean they're not credit worthy in some sense, but by measure of this score alone, the indication is they are not going to get access to credit, or it's going to be quite expensive with not preferable terms. And so this really is, when we slight verbal pet peeve for our industry. I don't like talking about small business, right? Unless by that we mean, small business loan, unless by that we mean consumer. Consumer loans, you have mortgage and auto and, credit cards, right? It's really diverse. Well, small business is really diverse too. And this kind of program is working with those walking in the door with a 571 credit score. Okay, so what happens to these folks as they get access to the line of credit? We're talking about 41% that are able to move forward in a pretty near-term capacity, stepping up from the $500 to the $5,000 line of credit. Now, that's not 100%. That was not the expectation or really even the goal. But the question is, with a pretty modest bet, right? The program is taking a bet on people to the tune of just, in quotes, $500. But that bet can pay off, is immediately visible for these 41%. Of course, longer term tracking needed for more are able to get to that. We managed that $500. Even though our credit score may tell you we couldn't manage it, we did. We managed that $500. That portion of this group, in fact, were able to manage the higher debt load. And when we look at total good standing on just the $500 loan, we see 3/4 are in good standing. So really, that's a bet that's paying off for 3 and 4 of those borrowers. Okay, part of what's needed in this broader space is the developmental services. It's the coaching, it's the encouraging, it's the accountability, it's the support, it's the structure, it's the advice, it's all of those things above. And so we heard from the participants that that was an important element in helping them achieve the gains. Just to understand how credit works, it is a almost deliberately mysterious process. It can feel very esoteric divorced from people's regular day lives, and yet it really matters. In some ways, it's one of the most important things people don't know about themselves that affects themselves. And so we heard interviewees describe about increased financial literacy since joining the program, articulation of personalized goals, and giving the tools to help manage credit. And of course, there's a need for dedicated outreach, and there's some resource intensiveness attached to that. This is not something that can just be AI-ified, just be app-ified. There is a place for tools to equip people, but there's also a place for needing that actual interaction. Okay, one quote. I felt like I got my syllabus, my study guide. I studied hard. I passed every checkpoint. If you give me a list of things to do, I'm going to do it one by one and attack them. It was helpful for me having that extra support, telling you what you need to do and when to get where you want to go. That's from one borrower that we heard. So looking ahead, as we completed this study, we see demand in the pipeline that's pretty robust. We also know that there's some time intensivity to coaching, and the low dollar credit line means the program's not paying for yourself. This is a subsidy thing, and so additional staff are needed if we're thinking about additional markets or replication. We also need some more research to really understand trajectories, thresholds, and what success looks like at different business stage, as well as the interplay between the owner's personal financial health, well-being, stress, and their actualization of credit objectives against the business health as well, and how they're progressing in that regard. Wrapping with a quote here, one said, I'm not an easy fish to catch, even though it's for my own good. The time needed, getting papers together, it's always been an issue for me. The staff were very patient, working one-on-one with me and trying to help me get it together. They said, you can do it. And so this reality. Entrepreneurs are busy. They're busy in their personal lives. They're busy in their business lives. This business income may be a part of their total income. It may very well not be the sum total of their total income. And so there's a lot to balance, and this is part of the journey. So that was the study that we have done. We're looking forward to doing part 2 and hope that all of you will be back as we think about sharing that to really understand credit outcomes and thresholds and success in the aggregate, and then also segmenting that by key groups, whether that be industry, firm age or size, or something about the economics, demographics, or even just really about the credit attributes that people are bringing together. So that's a quick recap. We have the paper. We'll put a link in the chat as well, and you guys can spend more time with it and understand it in terms of the direct findings, as well as we have some reflections on what it could mean from the industry. There's a lot of models. There's also a lot of need and opportunity that can be taken to meet those. So thanks.
Thank you, Brett, so much for sharing the insights. We would like to now give some time to Neysa. Is our a proud member of Ascendus, and she's the Get Ready program manager. So, Neysa, are you around?
Yes, I am here. Hello, everyone. I'm definitely a proud member of Ascendus. So I'm Neysa Crucetta. I'm the program manager for Get Ready. Just some background. I've been with Ascendus for 11 years. I have held managerial roles within the organization, successfully led teams, implemented effective credit management strategies, and helped clients navigate the complexities of accessing capital. I am excited to be here with all of you to present the operational design of the Get Ready program. And I trust that the positive impact will inspire others to apply and support various organizations in their mission. So just talking a little bit about the operational design of the program, it's essentially, so the Get Ready program is an entry-level credit line that Ascendus offers. We start the client off with $500, and it has the potential to increase to $5,000 as early as 3 months. Following the completion of a credit action plan, where we work with the client one-on-one to strengthen their credit score. We work with the client that have credit challenges, whether that be towards negative derogatory accounts or individuals that may have no credit or thin credit. That's something that we work with the client to kind of get insight into that further as we move forward with their application. The program is tailored to the specific need of the client. That's what's awesome about the program. So what we do is we develop a short-term and long-term goal to support the client with education, so that the client is able to graduate and an increase as early as 3 months. So eligible clients that are matched with the program receive personal guidance, education, and I would say an increased understanding of what's holding them back to access traditional loans or even other credit lines, right? So during the approval process, the client receives a free tailored credit coaching session, right? This involves them receiving a copy of their credit report, and many of them don't even know what's on there when they apply. So they get a better understanding of what's on their credit report as well as their score, information that is impacting their credit, such as past due balances. We consider them negative derogatory accounts. These can be delinquencies, collections, or even charge-offs, right? We also work with individuals that may not have any credit at all. So essentially a zero credit score, or even individuals, again, like I stated earlier, thin credit report, maybe just one account. And that could also be, and they could be in good standing with that account, but that could also be impacting them or affecting them from accessing capital, right? So what we like to do is provide this information to the client so that the client gains increased understanding on what's impacting them from accessing capital. Now, the personal guidance of the program is what helps them to, I would say, it strengthens their accountability, right? As far as being proactive with their credit report, a lot of individuals I've noticed when I work with them is that they're not really sure what's on there, or they don't really apply great effort, right? And so the education piece of the program is it's kind of like a light bulb. So it kind of leads them to figure things out, better assess what their debts are, right? And get a better understanding of how lending works, right? And I think that that perspective is super important. The program also offers credit building training, where we offer practical steps so that the client understands how to build credit. So a dialogue surrounding the advantages and disadvantages of timely repayment, right, and how that impacts credit. Parameters around credit utilization and its ability to increase an individual's score, right? The importance of developing credit history, and in some cases, the benefits of even applying for a secure credit card. So what we try to do is set clear and attainable goals by diving into debt management and budgeting strategies, right? These are things that a lot of small business owners really put on the back end to kind of really focus on just the nature of the business itself. And that really is the main concern that we try to address here with the client. So what this does is that it helps the client strengthen their money management habits, right? Often what we usually do is analyze their business and personal income as well, and then their expenses. Just trying to figure things out as far as how they can make some improvements on their credit. And we're talking about individuals that may have these outstanding derogatory unpaid balances, right, on their credit report, and how we can kind of navigate that so that they're able to increase their score and be able to access greater loans in the near future. Just provide that financial stability for them and put some goals in place for them. Also, that whole personal approach, assessing their financial situation, is what allows us to create a personalized credit action plan. So again, this program is one-on-one. Each client is different. So it is supported based on the client's need. And so by creating a personalized credit action plan, what we're doing is that we are assessing the debt or any situation within the credit report, even thin credit, and we try to create a plan. The client has a 3-month time frame where they're able to kind of work towards the conditions of the program, which is essentially improving timely repayment, right? These habits are what has been an issue for them to access capital. So by creating this credit action plan, it allows the clients to to take a step back, identify the need at hand and what's super important, and then kind of tackling them one by one. And so that 3-month time frame that we allow the client to do, we do periodic check-ins as well, just to make sure that the client is on track, that they're following the credit action plan, which essentially is just adding those accounts and information that's super important for the client to work on. And then once they meet the conditions, right, and complete the credit action plan, they're able to graduate and collect that increase. So combining education, motivation and support, credit building training can significantly enhance the client's willingness and commitment to build their credit. So I just want to say that I feel like this is such a rewarding program. We've seen such a huge impact in the lives of so many small business owners. And just the literacy on this program is what really helps the client, that one-on-one support. And it kind of helps the client gain a better perspective on what goals they have or what goals they can put in place. So short-term goal essentially is getting your credit, stable, right, as far as like building that credit score. And then the long-term effect would be obviously graduating and that score improving, which will allow the client to reapply for a larger loan in the near future. So yeah, I want to pass this on to Paul. Thank you so much.
Thank you, Neysa. You've heard about the findings, high level. You've heard about the operational elements of it. Just some things I wanted to highlight that there's so much here to share. It's kind of like where to begin. One of the things that I think you heard earlier is the support and the importance of it. But I want to go to something much more fundamental. This is about how to create behavioral change in a short period of time. And what we know about human psychology is you remember only 10% of what you hear 2 weeks later. You remember 30% of what you hear and see 2 weeks later. But you remember 90% of what you apply 2 weeks later. One of the important essential design elements of this is the time sensitivity of when you need to apply that checklist that Neysa was talking about. And we wanted to make it very short term because we've all been in this business for a while. We don't want to continue another long while. We want to see things happen quicker. So the time sensitivity, the application, i.e. the checklist to make sure you start to apply, that's a really important piece here. There's more that we're going to get into in terms of the productivity, the scale, but also I wanted to say more generally, this is a huge opportunity for any CDFI, any small business lender, because if you think of probably one of the biggest reasons why individuals don't qualify even for nonprofit lenders, it's probably because of credit or credit challenges. And if you look at just the universe of that, the opportunity, again, I go back to the pyramid. While so many are focused just on the very top or the top of the iceberg, if you think about the base of the pyramid, a huge, massive opportunity is multiples larger than those that have been sort of pre-qualified. And our ability to not only grow their credit, but step them up into whatever other offers you provide is really truly a transformative experience, and one that we've seen time and time again. So with that, Gustavo, I'll turn it back to you for Q&A.
Thank you, Paul. Thank you for these amazing summaries and what's next. So we'll officially are going to enter into the Q&A session. So if there's any question you would like to ask, please, you can use the raise button on the Teams function, or you can type the question via chat, and we will tell the speakers, Paul, Brett, Neysa, to go over those questions. Yes, I have a question. Aaron, please.
Hi, Paul. Aaron Huberty with Finexus. Thank you for the invitation. Interesting subject matter. In a prior life, I was with Wells Fargo, and we had a consumer finance company. And the consumer finance company really did not, interestingly, interact a lot of times with these customers. They tend to be a little bit more upstream, midstream than this. However, we did have a program which we used to purchase contracts, loan contracts, that were from first, second generation Americans who didn't have credit that would go through furniture stores, as an example. And the furniture store would extend credit to them. The customer would make 3 payments in a row, and then Wells Fargo would come in and buy that contract and then absorb the loan into its ecosystem, and then the natural process of gaining credit would occur. So my question to you is that in this time and age, and especially with some of the technologies that exist there, is there a partnership that Ascendus can take with small businesses like furniture stores who are willing to extend their own capital to not only buy the furniture, but extend the credit and give those families, individuals, their first access that might be sort of mutually beneficial for everybody?
I'm going to go off mute. Absolutely. The thing that I wanted to just clarify, I say absolute because the structure can be replicated just the way you described it. But I think the key piece that you mentioned earlier was consumer. And I think one of the reasons that we have focused solely on small business lending is that the consumer finance side has different disclosures, different requirements, and sometimes it can vary even at the state level. And so I think from a design perspective, you're absolutely right. I think the nuance, and this is why we want to have these kind of conversations, because I think the principles can be applied, but you have to adapt them. What we would need to adapt is A, ensure that the organization doing the lending is allowed to do consumer lending, and B, ensure that the compliance requirements for those disclosures, et cetera, also apply. So while the bank may be taking out that loan later, even at the first go, lenders like ourselves would be subject to those same rules and regulations. And I think one thing we don't have a lot of is a huge compliance department. But so that's part one. Part two that you're talking about, I want to just add on because we didn't. This is about to get ready, but you're also talking about another notion, which is graduating individuals to the bank. The reason we start here is that we have internally at Ascendus something we call an Ascendus Borrower Index, an ABI. And the first step of that journey is what we're talking about today to get ready. Then we have our core offers that help stabilize and grow. Then we have ways to increase to get you near ready to a bank. And then we have what we call as lendable. We've actually categorized our entire portfolio into 4 categories. And the reason we did that, Aaron, is that in that lendable, these are folks with over 700 FICO, with multiple years in business, with cash flows, with the business. And probably the only thing they don't have is collateral. And so our vision, when we talk about mobility, is really driving the how to borrow part of that. And we are literally working with our bank partners to, quote, graduate them to the bank formally as part of our process. So it's happening, but it's happening on the small business side for us. But what you're describing, I think, is a great example for those that do consumer lending, or maybe even consumer lending within a state, so it's a little bit more contained, but absolutely applicable. And again, the kind of discussion that we wanted to have today, because it's not about replicating what we're doing exactly, is about taking the essential elements of what we're doing and then adapting them to your organization, your lending, your geography, or your products. But we're doing what you're describing, but on the small business side.
Thank you, Paul. And thank you, Aaron, for the question. We have another question from Sam.
Hello, I'm Sam. I'm with Self Help. We're another CDFI. I don't have a question. I just want to compliment you because I think this is incredible. And I'm friends with Ascendus Fabiana. I see her here on the call. She and I are friends, and we thank a lot of you guys. And Self Help, we do consumer lending and small business and commercial lending, and I'm so happy to see how you guys have made such a strong connection between personal credit and small businesses. I just think it's awesome, and I look forward to digging into the report. That's all.
Sam, thank you for that, because another reason for having this webinar is I'll just personalize it. I have felt that there's so much creative brilliance in our field, but it doesn't necessarily get the light of day. And if we can start to learn more quickly what we're doing and take what's useful, we can move forward. I mean, the fact that you do consumer lending, well, Aaron, guess what? I think we've just identified someone that can do exactly what you just said, and that already understands it. So this is the purpose of these kind of convenings. Yes, to share, but also to learn, because while we're supporting business owners in their journey, we're on a journey too, and we're learning as we're going to. And so take what's useful, but thank you for the feedback. Thank you for the partnership. Love the dialogue, and let's love to build on it. So anyway, thank you.
Thank you, Paul, and thank you, Sam. We have another question. Brian?
Hey, all. I'm Brian Wall. I'm from the Low Income Investment Fund. We're also a CDFI, but do real estate based community development lending, learning more about small business, and have a great partner in Ascendus. Again, I'll echo, thank you. This was really fantastic work and appreciated the evaluation mindset. I'd be curious to hear, like, what were the top 1 or 2 things that Ascendus learned and is going to now change how you all do business? Because you've been working with small businesses for a long time, and I think it's a great example. You all are still learning. Like, we all can still be learning. So I'd be curious what the big takeaways that you're gonna use to change how you're gonna work in the future.
Boy, that's another webinar. There's so many. Let me start with I'm actually going to go narrow instead of broad, because I think there's so much. Actually, I'm going to go the other way. I'll go broad and then narrow. I think for a long time, we've understood that if money was the only problem, we could print $1 million for every American and say, we're done, right? But in 2 years, 3 years, or 5 years, I can guarantee that if they haven't been supported on how to use the $1 million, we're not going to have the same outcomes. And so money and advice are 2 sides of the same coin if you want to create the mobility. And I think big picture, what we've been embarking on through this program, and this program started back in 2023, and that we're learning to improve, is how to provide that support in effective and efficient ways. Effective, meaning that there's a real impact, and efficient, that we see enough productivity and things that we can replicate that. And that's the journey that we were talking about. And so I don't know that it's something new conceptually, but I do think it's something new in terms of how you apply that concept, because the importance of what Neysa does, and I think what Brett mentioned earlier, there's a room for technology, but we believe it's high tech and high touch. Going back to Star Trek, for those who used to watch it, Dr. McCoy was a human that would look at the situation, but he had these little recorders, these little tools to kind of quickly assess what's going on, and so I think we can use the best of both, but how to do that, how to marry it, how to blend it. I'd say big picture, that's the ongoing learning. Now, specifically to this program, the report that Brett and his team developed, we actually have a number of learnings on how to make our program better. And for that, I'd like to maybe either turn it over to Neysa or to Brett to just highlight some of the things that we heard, because while we've had successes, we're not done with this journey. And so I'd like to open up for them to just share, because I think your question offers that opportunity.
You want to start, Neysa, and I'll jump in, or you want me to go first?
Okay, Brett, you jump in. We'll start with Brett from the report perspective, and Neysa, you can add.
Great. And hey, Brian, good to see you, and others. I guess I wanted to start big picture too, and then we can zoom in a little more tactical. I just want to affirm, I think it's really easy to look at the report and the headline and like pictures, and we're doing this webinar, and it's really easy for me to fall into the mindset of this work is easy. And I think what I want to do is just validate how hard this work is. And it's not just Ascendus, right? I did a paper recently looking at a payday alternative model that Nick Mitchell-Bennett and his team does in South Texas. The work that you guys are doing, right, to build up multifamily developer capacity, small emerging developers, like that's hard work, and it takes some effort to help people get to the point where they're ready to receive credit, at least of a given size. And that is the beauty of the CDFI model. And there's, a spectrum of CDFI impact and reach and depth of impact. But validate and lift up the examples that I do see, and there are multiple of them, where it's just so additive to our financial landscape in the moment where some are asking what effect CDFIs are having, and does this model even need to have subsidy attached to it? The answer is, if you're trying to make loans to people who are at a 571 FICO score, yes, you're achieving impact, and yes, there needs to be some subsidy attached to that to help people get to the point of borrowing ready. Now, if we're talking about 504 loans, that maybe that's a different conversation, if maybe even 7A loans. But so I just wanted to validate the work that you all are putting into this, Ascendus and many others in your specific market contexts, and just, I guess, saying again, like, there's no cheat code, there's no shortcut, like there's no jump to the next level. Like, these are folks' lives. It takes time. It took a while to get to this position. It's going to take a while to get out of that position. Okay, that's big picture thought. Smaller picture work is, I think we really do need more insights to help us understand for whom is entrepreneurship beneficial, in what ways, in what contexts, what can be achieved, and what are the different trajectories. And so we're excited to dig into that a little bit. I think there's more needed there. There's a lot of narrative or even myth in the small business space that can be divorced from reality, but really helping to unpack how it is that people are making gains, what they're attaining, and how it's affecting their personal lives from a wealth and well-being perspective is super important, and something that I see as continuing. We also heard things much more tactical in the operations of the program. We've written up some of these about how engagement happens, about the tools that the program uses. So there's things that borrowers are always very free and open to share their advice, as you all know. And so we've got those elements as well in terms of the program. And I would say so much of life and the program, and also, like, it's about expectations, right? Like, I sat yesterday, I was in this meeting on the tarmac. My plane got in 40 minutes early, and I'm like, I'm going to get to the gate early. It's late. I have to get to my hotel. And then we sat for 40 minutes because there was construction on the tarmac, and we couldn't get from the tarmac to our gate, right? And, like, is that a problem or not? Like, it's all about expectations, right? And so when these borrowers are entering in, some of them are really annoyed to be limited to a $500 line of credit. Maybe they've accessed more money than that in the past. Maybe they think that that's paltry compared to the amount of capital that they need. And yet, their credit standing is such that they haven't demonstrated to a range of actors that they can successfully manage a lot more of the credit than that. So it's about setting an expectation over a longer term horizon that really takes that growth mindset and says, yeah, I know you're annoyed, but here's where we're starting, and here's where we're trying to build towards. We're not limiting you, we're equipping you. And so part of it is being really clear with people about that journey and that expectation, so they don't walk in disappointed or frustrated with the process and what the milestones are, so that they can really make that achievement. But you hear some of that as you interview borrowers too, and I know that you guys do in your contexts, but framing it as, well, I still got to the gate on time, even though I waited 40 minutes on the tarmac. Like, so, you're still going to be, give us 3 months, show us what you can do in 3 months, and we're going to bump you up to that $5,000, 10x level. Who gets 10x in 3 months? So part of it's around narrative, part of it's around framing, part of it's around having the uncomfortable conversations. Part of it is helping people understand where they are at, even if that's not where they want to be at. And then it is that reflective adjustment and learning. Is this the exact right dollar point? Can we stretch a little more? Have we stretched too much? What loss rate can we tolerate? What advancement rate do we need to meet to? Those are very real tactical trade-offs that the program's making, and we'll continue to refine and adjust. And as soon as we think we've figured it out, we go into a different industry segment, or we go into a different economic climate, or we go into a different geographic market, and all of this gets put in the blender again. And so we're never done with this kind of effort as well.
Thank you for explaining that. Very clear. Just to kind of piggyback on what you just said, yeah, absolutely right. This is not an easy product to give. A lot of individuals have really high expectations when they apply for a loan. And so what makes us super unique, and just like kind of like what Aaron said, a lot of lenders don't really want to dive into things like this. What makes Ascendus so unique is that we use soft pull technology. We are essentially making an assessment to the client. So when the client applies, their credit is not being impacted. They're able to kind of get matched to get ready. We go over what the program entails as far as like the conditions of the program, giving them that free tailored credit coaching session, also reviewing their financial information. A lot of businesses that apply with us are lucrative businesses, right? But there's a disconnect as far as credit. Right. And so what I typically like to do is really set those expectations, like Brett said. We don't want to waste anyone's time, but it's like, okay, you're generating 40,000 average as a business owner. So you obviously have a strong foundation as a business, but what's going on with your credit here? And so let me see here. You all hear me?
Yep.
Okay, I'm gonna shut off my video because it does skip a little bit. So apologies, the computer. But really quickly, I just want to add that just doing that comparison and having the client understand what cash flow management looks like, right? Essentially, it's like, hey, today there probably would have been a possibility to access a close to a $40,000 credit line, right? And just explain the whole financial education as far as the literacy aspect of it, right? Your credit is a key to unlocking this financial opportunity that's hindering you currently. Let's work on your credit, right? And that's the reason why we've been so successful, because we are doing that assessment so thoroughly. We're looking at their financial situation. We're doing a comparison with their credit. We obviously understand that credit is the most important piece to accessing capital. And just that literacy in itself and education is kind of like a light bulb that goes off in the client's head. And so the reason why you see so many people applying for this product is that they do see the impact. They understand that, okay, this may just be a small amount, but don't focus so much on the amount. It's where this amount is taking you. It's entry level, taking you to larger products to continue to build credit. So I just wanted to add that in harmony of what everyone was trying to say. So setting that expectation and offering that education has been super, super helpful for all of our clients. Thank you.
Thank you, Neysa, Paul, and Brett. We might have a little bit of time for 2 other questions. I see, Aaron, you have your hand raised again, if you'd like to ask, and then we can go to Jonathan before wrapping up.
Yeah, sorry. I wanted to build on something that Brian had mentioned or posed relative to real estate and specifically to small business owners. In my last role at Wells Fargo, we provided small commercial real estate loans to small businesses, so $2 million and below. So that program attracted a lot of businesses who were first time or perhaps didn't have good credit, perhaps no credit. And so there was a lot of throwaway, for lack of a better phrase, in that process. And so that strikes me as an opportunity. I mean, we're thousands of customers on a monthly basis. Strikes me as an opportunity that partnerships perhaps between Ascendus and banks with the right type of joint transactional opt-in to share information. I guess posing that as a question, is that an opportunity? And then second is that previously at Wells Fargo, we did have a turn down referral program on the consumer side. And it was very successful. And so I'm just wondering, posing the group, and I apologize if this has been explored before, but do those types of partnerships ever make sense for Ascendus? And maybe it doesn't have to be a big bank, maybe it's a local bank. Now that, you know, with some of the technology that exists today, are they realistic types of programs? Because I don't know if small business owners know to go to Ascendus, but they do know to go to their local community banks, and typically those local community banks are highly selective. So there's a gap that's happening somewhere in between the field of those two opportunities, and is Ascendus in a position, or do they want to serve that market? Thank you.
I'm going to jump in on this real quick. Yes, 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 yes. I would say not just specific to Ascendus, but I think all the probably small business lenders on this call partner with banks. And unfortunately, we've all had to do it the hard way. With a person, the person could change, they have to remember you. So the ability to automate declinations from a bank to CDFI is, I think, kind of the holy grail of what we'd love to do to really support the banking sector. So I do think that there's a user experience element to this. That is definitely a technology experience, but here's the part that where it hits a wall: the compliance and how to do that with the institution. So what you're talking about is where we need to be as an industry. I mean, banking and CDFIs that do small business lending or consumer lending, we need to be that closely tethered so that it's seamless, similar to what Neysa said. We haven't got there yet. We have some bank partners where we've gotten closer. We actually do have an automatic declination with one bank partner, but it's still kind of a letter versus system, but we're working on it. Yes, yes, yes. This is what we need to do. This would be the holy grail. And we'd love to work with others to create this, not specifically just for ourselves, but we think the entire field would benefit for something like that. So I'll stop there because I know we have other questions.
I'm happy to share any Wells Fargo experiences, both good and bad, if you think they'd be helpful.
This is great, Aaron. Thank you for that.
You're welcome.
Thank you, Aaron. And Jonathan?
Hi, so I'm Jonathan from Brooklyn Chamber of Commerce. We actually have a CDFI ourselves, Brooklyn Alliance Capital. The person who's in charge of that is out of town, but I do plan on sharing this with him. And actually that said 3 questions. First one real quick, will this recording also be made available to
Yes.
share? Okay, awesome. And the 2 other questions actually are relating to the report and like data and findings and such. I'm curious. First off, I sort of skimmed the report. It's great, and I especially like the personal touch, like telling the actual stories of business owners and their experiences. But I'm curious. So I know that for this particular product, your business has to be at least a year old. Did you get to document at what stage people who participated tend to be in? Like, were they sort of more towards a startup phase, or were they more like well established, like let's say 5 to 10 years or even more years older as a business?
Brett, do you want to take that? I think that's one of the things we looked at.
Yep, it is. So we did, and there's a distribution, I guess is the short way to say it. It absolutely is the case that some borrowers are very new and emerging. So I can share screen just to give you the real highlights here. So 1 to 3 years, about a quarter of businesses, 3 to
I missed
5,
that. Sorry.
just a bit of half, 5 to 10, another quarter, and a small amount even older. So it's really a range. I can make that a little bigger, sorry.
Yeah, that's
Really a range, you know, a range that reflects just being, you know, older in time doesn't mean you don't have need for this product, but certainly the
Right.
bigger need is among the new and emerging firms. And the same around employment. I mean, clearly, you know, most are just that solo, but there are definitely a range and revenues as well. You know, even this may surprise people why firms, you know, earning revenues in this order might need a $500 line of credit, but it just shows that credit and, you know, revenues are different things, and you can have the one without the other in the same way.
Yeah. And I guess the last sort of question, considering the amount, you know, you start at 500 and then you can graduate to a $5,000 line of credit. Out of curiosity, were you able to collect metrics as to what sort of things people would use those for? Like if they were to get that amount?
Neysa, do you want to share? Because at the 500, well, first of all the uses will be for commercial or business uses. So and at $500, it could be almost anything: supplies, inventory, a chair. You know, because the purpose, and the purpose of that isn't the amount. The purpose is what Neysa was saying, that we want to
Building a
get you on
credit,
track
yeah.
to start getting a small enough number that, you know, you really can deliver on consistent repayment. So that's point number one. But it's all business uses, and at $500, almost anything would fit. The other thing I want to go back to is the reason that you'll see businesses that have been in existence for at least a year is that we're trying to challenge or address the issue of credit. You can't address credit if you don't have cash flow. So
Right.
for maybe for another group, they can figure out how to get people that have no cash flow, you know, and take it one step deeper. But, you know, we're going deeper and deeper into the sea. But right now we're only going as far as folks that at least have the ability from a cash flow perspective to repay, because what we're talking about is a change of behavior, not necessarily the ability to repay. So I just wanted to shift that. And again, it goes back into the design. How deep does the submarine go in terms of mission depths?
Fair. All right.
Thank you, Paul. Thank you, Jonathan, for the
Thanks.
answer. I know there are other questions in the chat, but we are almost on time, so we will wrap it here. We will follow up on the questions. I know we can follow up by email. I would really like to thank you all for spending your lunchtime with us and being here for us, hearing this amazing work of the Get Ready program. So thank you very much, and we will follow up with an email sending you the webinar, and any other questions, we are here for you. Thank you very much, all.
Thank you,
great day.
everyone. Appreciate your time
Thank
and
you.
appreciate
everyone.
the work that you're all doing.
Thank you.
Thanks so much.
Take care.
Thank you all. Bye.